Hello and welcome to today's episode of the Weekend Investing Daily Bytes. Today is 13th of April and it's a truncated week. In fact, the next 3 weeks are going to be short weeks, 4 days in each week. So tomorrow, Friday, is a market off, and so is the next Friday. Good day from the market's perspective. There was a healthy dip at the start of the day. Uh, Nifty by the afternoon retraced almost 80-90 points, very near 17,720, and then recovered the entire loss of the day and went beyond the previous day's high, which is very, very positive. So now we've had uh, 9 days of an up move and not a single close which is below previous day. So that is very, very strong, very, very strong, I would say. Now I'm reasonably convinced that even if we get a corrective dip now, it may be shallow and we may make a bottom here. So I think this 16,800 bottom is done, and we will now be looking for a nice uptrend into a new all-time high, preferably in 23 itself. That is what I would like to think the trajectory will be. Nifty had primarily IT stocks giving up ground, with TCS coming below expectations and Infosys also below expectations post market. You can see that although Infosys result came very late, market has already discounted it by 2.73% today. HCL Tech also down, Tech Mahindra also down 2.2, 2.3%. So this sector of the market is being bashed quite well. The rest of the market was pretty sanguine. Banks remained quite all right, with some PSU banks actually moving up. Autos, two-wheelers have started to move up. So one could see TVS Motors, also Aisha Motors has been doing quite well. Power and infrastructure stocks along with pharma stocks took some corrective move today. But overall, I think market is in a very, very good situation now. And one should look for opportunities for the market to go to an all-time high. PSU banks, highest gainer for the day at 1.5%. Real estate also 1.1%. Real estate actually has been doing very, very well. The projects have been taking off. A lot of people are still in disbelief that the real estate rally has started, and once real estate rally start, they can carry on for years together. So this is, the real estate market is not like the stock market where you'll go for 6 months, 12 months, 18 months, and then there'll be a disaster after that. Real estate markets can last for 5, 7, 8 years. That kind of moves can come, and I think that we are in the midst of that now. The same thing is happening on the precious metals, gold also. That move that started a few years ago, 2018-19, is in the middle of the heat right now, and it has much more legs, I believe, to go up further. And once the Nifty also breaches the previous highs, we will get further momentum in the equity market also. So all that, I think the risk on trade is about to start. US markets remain a bit fragile, and that is the only single point of headwind that every market has. That what happens if the US has some sort of a disaster, and they are doing everything to make sure that they will get one. But how long can you just keep kicking the can down the road, or brushing the problem inside under the carpet? It cannot last for too long. The kind of fiscal deficits that they have now, the kind of debt burden that they have now, at the current interest rates, it is not sustainable. Anyhow, so coming back to our markets, we had a very good day, a good week, and a good month on almost all sectors except IT. Mid cap stocks also gaining ground, although mid cap is still reasonably, far away from creating a new high. Small cap stocks have also recovered very well. Uh, may need some consolidation somewhere, after which a base formation may take place, and then the rally can start upwards. Nifty Bank very strong. I've been mentioning since many days. You can see today's action came down to 41,500 and it has zoomed past these two resistances into 42,132. It is clearly in a very strong uptrend. The Nifty Bank. This is the main reason why I feel that there is a lot of bullishness coming in very near future. This is the US dollar index chart. You can see that it is making a perfect head and shoulders pattern. Having said that, there is no guarantee that a head and shoulders pattern will go to its logical target point each time, but the probability of that happening is very high. And it does seem like we are just waiting for that next one announcement or some breakdown somewhere that will cause this to precipitate very fast from here. I think below 101, I mean, we'll see the low 90s very quickly. That is, maybe I'm biased because of my positions in the markets and in precious metals, but this looks like a perfect storm for the US dollar that is waiting to happen. TVS Motors, the chart flew off today. There were reports yesterday and day before that two-wheeler sales have started to pick up very rapidly. And just look at this chart. I mean, this coming from April, May 2021, it rallied from 600 to almost 1200 levels in that period. And then it has just taken a 6 month of sabbatical on the side, correcting and also creating a inverse head and shoulders pattern. It's a very strong flag as well as a IHNS formation. I mean, easily this can go much higher. So this is something that I think is worth your your watch list. And as and when you find a trade setup, you can get into TVS Motors. This is looking like a very strong stock. So this is all I had for today's episode. Let me quickly go see if I have any questions. If you do have any questions, please put them up. I'll try to answer them as much as possible, as much as I know about things. If I'm unable to answer, I will let you know. Let me also show you meanwhile some other charts while people are putting up their questions. Oops, I was watching Jagan's trades here. Let me just go down and see where I am. Let's see where my charts are here. Yeah. So let's also look at maybe the US markets. The US markets, despite all the recession talk, is still looking quite all right. I mean, they haven't made a low of nearly 3,500 on the SPX and now sitting at 4,100. So a good 15% off the lows. This is not the kind of market where you're calling for a recession and the market is off 15% from the bottom already. So this does look like they have gone into some sort of a range and the market is not willing to go down any further. In terms of the dollar, the Dow Jones index, also you can see there is this kind of a very good support that the market has taken. Sort of just simmering around this 34,500 odd level is taken out. I think we are off to the races post that. So from the perspective of weakness in global markets, the global markets don't look so weak anymore, although the narrative is still quite weak out there. So from that perspective also, India market is likely to the market performance, and that's what it is doing right now as well. But yeah, I mean, this chart of dollar index, let me also give you context of the dollar index. Let's take out all these drawings. So you can see that the dollar index dramatically fell in 85 to 92 period, a period which was extremely good for Indian stock market. Then it dramatically fell from 2002 to 2008, again a period very, very good for Indian stock markets. So whenever the dollar falls dramatically, that is a very good period for emerging markets and also precious metals. And that fall may have started here. So I'm assuming the fall that happened here is going to happen here. That is sort of the mental framework that I am working with here. So if that happens, I mean, Nifty will go to levels which we may not be willing to believe today. That's what's going to happen. So if you see this period, 85 to 92, let's go see what happened in 85 to 92, just so that we are on the same page as to what we are doing here. So let's see. This is 85 to 92 for you. From 256, Sensex went to 4,400. So we had a 15x move in the period when the dollar index fell. So I hope that the dollar sense now. Let's take the next one. The next fall was Feb 02 to January 08. This we already know what happened in Feb. Again, before these rallies, nobody could guess the kind of moves that are coming. 02 to 08, Nifty went from 1,000 to 6,000. 6x move in those years when the index fell. So very, very powerful macro things will happen. I mean, most people are busy with earnings and what happening in each company, but you need to take this larger picture that what is this global impact of such move that's going to come. There's going to be such a gush of money into emerging markets that people will not get the desired allocation when they want it, and that is what to come in my view. So few questions. Let me take a few quickly. Samir Ahuja says, which stock from the auto pack could be long term bet in your views? So I can't select a stock, but we will select stocks which come into our filter. So currently Eicher Motors, TVS Motors, Bajaj Auto, Mahindra, these are all looking good in our studies. I don't have any more questions right now. I have a lot of hellos. So hello to everybody who says hello, but rather I would request that if you have a question, please ask me. I have exactly now, let me just check the time. Yeah, just about a minute left on this. So very, very powerful, correlation that I've shown you on the dollar index and what happens in the equity market. I can also show you what happens in the gold market, for instance. So this is the gold chart for Indian rupees. So 1985 to 1992, right? Okay. So here is 1985 to 1992 for you, ladies and gentlemen. Gold went from 140 to somewhere close to 368, so about 1.5 times more. And the next move was 2008. Here is 2002 to 2008. Went from 500 to 1500, 3x here also. So in periods where equity markets did extremely well, gold also did extremely well. So there is no cross correlation that whenever Nifty performs, gold has to go down. There is no cross correlation like that. But the periods where Nifty is not doing well, gold INR does well. You can go check all the periods. So that is the kind of beauty of having gold as a hedge and as a complementary asset in your portfolio. So I have only this much time today. Thank you so much for watching, and I will see you the next time. Bye.